Welcome, everybody. We're about to begin the webinar, first quarter 2018 financial review. Before we do so, we'll start with the safe harbor statement, and then I'll turn the meeting over to Mr. Milton Toddle III, CEO and Chairman of the Board of DPW Holdings, as well as Will Horn, CFO of DPW Holdings. This presentation contains forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995, including, but not limited to, statements about DPW Holdings, Inc., DPW expectations regarding the market demands, future financial performance, the implementation of strategic plans, and future growth. These statements are made based upon current expectations that are subject to known and unknown risks and uncertainties. DPW does not undertake to update forward-looking statements in this presentation to reflect actual results, changes in assumptions, or changes in other factors affecting such forward-looking information. Assumptions and other information that could cause results to differ from those set forth in forward-looking information can be found in this presentation and in DPW's filings with the Securities Exchange Commission, including its most recent periodic reports, including the risk factors listed in the Form 10-K and for the year ended December 31st, 2017, as amended, available on the website and the Securities and Exchange Commission website at www.sec.gov. At this time, I'd like to turn the call over to Mr. Milton Toddle III.
Yeah, thank you, Darren. I will say this is probably one of the more exciting calls I've ever been on. We just ended the first 90 days of the year in terms of the reporting period. It is a little unusual that we're in May and we're reporting March 31st. That always kind of skews the numbers a little bit in terms of what we're talking about presently versus the future. I'm gonna take my time today on the call to cover some really important highlights, because while I don't pay attention to social media except on the company's Twitter account, where we do put out some information, there is a lot of questions being asked that lead me to believe that people are somewhat misunderstanding what's going on with the company. Excuse me, Amos, or anyone on the call, please mute your phone if you're not talking. Thank you. So let me start off by saying the quarterly results, quarter over quarter and year over year, were great. They were largely due to acquisitions. As everyone knows, this is an acquisition story as we transitioned an old line business to a more of a diversified holding company. So I'll cover the results very quickly, and that is we ended the quarter at $5.196 million in terms of total sales versus last quarter of about $3.1 million versus last year at $1,628,000. A pretty dramatic increase. But part of the education that I want to give to everybody about what we look like from an acquisition perspective is when you're in the middle of acquisitions and growing, your reporting is very behind relative to the time that you encapsulate the acquisition you made versus recognizing the revenue. So for example, many of you know we're in the middle of acquiring Intertek, but the actual closing date didn't happen in the first quarter. Therefore, the $2.5 to $2.7 million in revenue that would have been in there, which would have taken this number higher, is not included. So there's no Intertek revenue in the $5,196,000. Now, the company's acquisition of Intertek was approved by the board of directors today, a little bit before this meeting, right, before this conference call. So assuming the Intertek acquisition closes in the next 24 hours, which we believe it will, maybe 48, but we're pretty sure it's going to be around 24 hours or so. Assuming that closes, you're only going to have 40 more days of this quarter left to include their total revenue and their backlog, right, in terms of when you're reporting. So you should see a very dramatic increase in the total top line revenue as you integrate each one of our acquisitions. Let me take another step and explain that our hospitality business, even though we're a lender to it since last December, is not reflected in the financials. If you would have included in those in the financials, you would see a hospitality business, you'd see at least an additional $1.5 million to $1,750,000 of first quarter revenue, but that won't be introduced until this quarter. And so I was hoping that Will maybe could comment on, well, no, Will, I'll get back to that in a second. I'll bring Will in to comment on that integration as you see the top line revenue ramping and the reduction of our capital needs, which would be a reduction in the total capital need to be raised, but a dramatic increase in the total top line, assuming we don't make any more additional acquisitions. The gross margins for the quarter decreased from 43.5% to 26.9%. A really simple answer here. So we have pretty decent gross margins, but the first few machines being made by MTIX, they're kind of a learning process. And so we have a fixed rate of profitability on the first few machines. And then our profitability increases as you ramp the number of machines as you go out. And so that's an important part of understanding why the gross margins are affected. Now, we did get to report for the quarter 1.7 million plus of revenue from MTIX. In fact, we reported $1,793,000 from MTIX, and that is included for the quarter. And what we said in our guidance here is that we expect to recognize between 6.4 million and 8 million of total revenue for the MTIX purchase order. That would reduce the 50 million to 42 million if we reflected the full 8 million for 2018. This will be an important thing going forward because you'll start to see Coulis's revenue ramp as they continue to manufacture machines and bring on that backlog. As many of you probably saw in the press release, we did report a backlog of approximately $68 million, and that backlog should increase over time as Intertek is integrated and we start to see orders from the Indian government and more orders flowing through FMF. Now, as we transition to looking at FMF, foreign military funding, one of the strategic reasons why Intertek is going to be part of the loop here and why we acquired them is because now Intertek is going to have access to U.S. defense money because they're now going to be a U.S. subsidiary of a U.S. company approved for foreign military funding and defense contracting. I'm gonna transition over to the assets of the company now, and then Joe, just hold on one second. We'll continue to go forward there. The revenue increased. The assets of the company increased by 7.9 million, almost $8 million, to 38.493 million. Of course, once again, the quarter ended March 31st. We're into May with the acquisition of Intertek and the other capital we've taken in. That number is going to be much larger in the second quarter. As we approach the end of June, that number will get much larger. I expect that number to be north of 50 million, maybe even closer to 60 million, depending on what we lose for the quarter. I will point out to people that when you look at the total loss, there's two really important things to remember. Joe, let's switch to the income statement real quick for a second so we can point out to them some things to remember for the income statement. Thank you. So when you see the top line income statement reflecting our total revenues of 5,196,000, you go down to the bottom line, you see other comprehensive income, and above that, net unrealized loss of securities. Well, our portfolio for our total securities ended at about $10 million. So we have $10 million of either securities held for resale or securities held in our trading account. When you add those two together, that's about 10 million bucks. But what happened is that one of our positions declined in value. And so while we didn't sell it, we mark it to the market each quarter. Warren Buffett talked about this with Berkshire Hathaway. You've seen a lot of reports about this in the media about how you will be flowing through everything through the income statement. So you will see a pretty big fluctuation in our quarterly results as you watch our portfolio grow from the 10 million it is now. We expect that to grow over time. These will be securities held for resale and stuff we hold on our balance sheet in our trading account. I expect that number to grow dramatically as we continue to take positions in other public companies and as we continue to be aggressive on the acquisition trail. And then what happens with MTIX International, their roll up and their hoped listing up to the NASDAQ. So that should make for a pretty volatile, comprehensive net realized loss or gain. So truly, in my opinion, a wasted number when you look at the fluctuation quarter over quarter of the stock portfolio. The number you want to look at is whether what we sold or what we bought relative to those adjustments. So as you've heard someone much smarter than me talk about the comprehensive loss or gain in the stock portfolio, somewhat of a waste of time, but it is reflected in our number and makes our loss look dramatically more than it was. I'm sure when people see the $10 million number, they're not taking into account that 4.7 million of it, 4,741,000 of it was the change in the value of our securities portfolio and not really reflective. And if you go a little further to total comprehensive income, you'll see that our net cash charges for the quarter were, I want to look that up real quick. Sorry, I lost my way a little bit here with that. I believe that the net cash loss number was on a non-cash basis was about $4 million. I'll get that number. Will, do you have the non-cash number for the quarter? That'd be helpful for everybody. Let's go up to the, let's go back. Okay, so I'm going to switch back to the mission statement. We're going to skip around a little bit here because I want to cover some things. We truly are a holding company now. We are truly, in my opinion, at the end of the quarter, we've gotten to some of the scale we want. As you can see, the asset base will increase. We do have some acquisitions pending, as I talked about earlier with Intertek, but from a mission statement perspective, we truly are moving forward with our mission to have the different categories. Can you go back up for a second, please, to the different subsidiaries, Joe? So as I skipped around a little bit with the presentation, I wanted to cover some topics. So you see right now the three key holdings we have: Coolesys Technologies and their subsidiaries. Everybody knows Intertek will be under Coolesys, Super Crypto Mining and its operations, Digital Power Lending and its operations. You will see later on in the year, the hospitality business will come into play. There'll be a fourth holding there, and then the businesses that they own in hospitality. And then you will see eventually a real estate section pop up there. We are actively active in the real estate space right now. We're not reporting that as of today, but I can tell you we have a very big project that we're working on, and we're very excited about that. That will continue to change the dynamics of the holding company. So to go back to where I was about non-cash charges, the non-cash charges for our total losses were $4,152,000. So you can see a lot of that, the loss was eaten up by non-cash charges or the mark to the market of the portfolio. And I encourage everyone to read the press release along with the PowerPoint. It'll really help with the narrative so you can understand where we are. We try to give a little bit more of a comprehensive breakdown of some of the individual numbers. Let's continue. Keep going. Right now, if you look at the organizational holding structure, you'll see that Coolesys will have Intertek underneath it, and you'll see that we increased our position in MTX International by a little bit of a smidge. We now, on a beneficial ownership basis, own 83.1%. Of course, if anyone converts or the founders convert, we would be diluted down from there, but we do have a large position in the company. We continue to own a position in WSI Industries and Sandstone. Let's continue. We created, with the help of a consultant, this infographic. It is a kind of a one-page outline of everything we're working on with the holding company, the underlying subsidiaries, et cetera. Maybe a timeline on the right-hand side. You can see when you look at the top of the infographic, 2015, 2016 highlights, 2017 highlights in terms of total assets. So you can see that our assets have went from 5.4 million in 2016 to 30,510,000 to 38 million as of today, almost 39 million, excuse me, as of March 31st. And that number is going to be closer to 50 million, maybe even closer to 60 million, depending on some adjustments for the end of June. You can see our revenue numbers, which were stagnant for many years. We've done in the first quarter, and remembering back to what I said in the beginning of the call, we did in the first quarter almost more than half of what we did all of last year. And what's a little misleading is that we didn't include all the acquisitions because of closing, timing, and other reasons. So I'm pretty optimistic that when you see this fairly dramatic growth, it'll come in line a little bit here. I'm sorry, I'm getting questions there. Okay, thank you. All right, let's go to the next page. We're going to come back to the infographic. I really like this. Please, if those of you contact me, I'd love to get your feedback on the infographic, and if you think you wanted more onto it, those of you who are in touch with me. We covered some of the highlights of comprehensive income, the total loss, total revenue, etc. We cover the non-cash charges. For the quarter, we raised $11,892,000. I'm going to talk about dilution because this is probably the #1 question I get, and it is a little misleading because we don't take the money we raise it and just go burn it. We're buying acquisitions which create assets, and those assets are reflected and supposed to earn us money. And so the relative term is what is the performance we're getting on the total assets we've deployed. So when we get to the end of the June quarter, let's say we ended at 60 million in assets, we'd want to know what those rate of return on those assets were and how well they were performing. We really have laid out the strategy for a long time. I get a lot of questions about someone asking me, like, what's happened and what are you diluting on? And we've been doing this. We've been on this acquisition trail effectively for, I think, the better part of like 5.5 or 6 months. So people's ideas and their questions seem to be so short term that it's almost impossible for me to answer them, because the bulk of the questions I get generally are from people that appear to be day trading the stock or really are not paying attention to what we're buying and understand how the revenues were ramped. So I really just can't accommodate everybody's concern about this, but the raising of the capital as a holding company, it's pointless to own a holding company without the required capital to grow it to the numbers we want to get. We want to be $100 million plus in revenue. We want to be $100 million plus in total assets, and that takes time and energy, et cetera. We're going to move on to an important part of the process here. But I was reflecting earlier about what happened with Bitcoin in the first quarter, cryptocurrencies, and we're going to switch to that next. Let's move the slide forward. I've already covered this slide. Okay. Can we switch real quickly to super crypto real quick? Thank you. Okay. So this is a very tricky situation with the first quarter. We started off in January, late December, really aggressively installing miners and wanting to get to a certain spot. We put miners in our Irvine location. We put miners in our LA location with a mindset that we were going to find the best place to mine. And we really found that for us in Indiana. And so we were very pleased with that. But what we learned a lot was that when we were installing miners, and you guys know, all of you know Crypto Joe, we really discovered that the mining was being affected by how much heat was not being displaced from the miners. And we really made a strategic decision towards the end of the first quarter to take our miners offline and move them to Indiana and install them there rather than have them out here in the higher cost facilities. So we have our facility in Indiana, which we've said in my quote is operational. It's doing very well. We're incredibly pleased with that. And where the misnomer is, if you look, it says we mined 237,000 worth of crypto in the first quarter. We're doing more than 400,000 a month every single month now, about 1.2 million a quarter, and that number is growing. We expect as we ramp towards 10,000 machines that number will go dramatically higher. It's not hard to do the math based on what 10,000 machines would produce you. One of the other things that we're doing here in the crypto space, which we're pleased, besides doing 400,000 plus a month in Bitcoin and Litecoin and shape-shifting to Ethereum, we are in advanced talks to develop our own miner. We're in major discussions with a major manufacturer of the chipsets to produce our own miner, first for ourselves and then available to the public. We want to be a North American company that's competing with Bitmain in this space. Started to echo real quick, sorry about that. So we want to be a North American company that's competing with Bitmain. This is a hyper growth business for us. And if you go back and you tie that to Coolisys, the two sister companies, Coolisys is in advanced talks and development and helping us build the miner. They will be our manufacturer. They're building power supplies for us that'll be integrated. And we really think not only will we achieve our 10,000 number, but we now have the facilities to allow us to go to more something like 20,000. And we're looking at continued capacity to be big in this space. One of the reasons why this has transitioned over time is because these data centers we're building can also be used for AI. And so this has become a really collaborative relationship between Darren and his staff at Super Crypto and the staff at Coolsys. So I'm going to give Darren an opportunity to talk a little bit about what he feels like about what's going on in Indiana, the transition, the current 400,000 plus a month he's doing. And we have said that we'll be with about 5,500 miners operational by July 31st. And we still believe the 10,000 by the year end. Darren, why don't you make some comments here on what you think are important for everyone to know about what we did in the first quarter and what we're doing now?
Thank you, Todd. I think the key here is to emphasize the fact that for long-term growth, we need to build a strong foundation. So we've paced ourselves and we've actually stepped back from an aggressive pace to set things up correctly and establish relationships that will allow us to meet our growth not only this year, but into 2019, which we've already discussed how we're going to purchase machines and grow throughout the next year. Unlike our name, we truly are more than just mining, as evident from this graphic. We spent a lot of time and energy in meetings, not only with Coolsys, Almost and his team, but also with chipset manufacturers, as Todd suggested, and then also working and modeling out our cloud mining offerings. When we're going to launch our next round of cloud mining, shoring up that website, security protocols, and preparing for another round, which will happen shortly this year. Additionally, we're focused on blockchain and mainstream blockchain opportunities. Again, to put a sort of a tentacle outside of just the pure crypto play, but also position ourselves to support real estate transactions and financial transactions, where we know that that's really the future of blockchain and blockchain growth. But I would just add that there really is no concern about reaching the 10,000 number this year. We're well on pace for that, and excited about the infrastructure in the Midwest. The team there is forward-thinking, innovative. Our machines have never run so cool and are delivering us Bitcoin in our wallet at incredible rates. So we're excited about that partnership.
So appreciate that, Darren. Thank you. I think the decision to move miners to Indiana versus continuing to build them or install them in Southern California, it gave us a little bit of pause. And it's important to note, too, that the crypto portfolio was basically collapsed during January to March, when you saw Bitcoin come from 15, 16,000, Ethereum from 1,400. You saw all that basically you were kind of mining in place. As you mined the asset went down in price. And so it was a really difficult first quarter. I considered it to be kind of crazy, where you're mining something in real time and it's worth 10% less the next day. The stabilization of Bitcoin above 7,500 to 8,000 will make things relatively easy for us. But our thesis is still really simple here, and I'm going to make it really simple for everybody. We believe, and we believe we'll demonstrate to you and the shareholders and to the market in the next 3 to 4 months, we believe that we're not only going to be one of the most competitive price mining companies, but we're also going to have our own miners. And as we build this out, we believe this is a question of power. And it's clear to us that this is a power play, whether we're mining Bitcoin or any other cryptocurrency or providing AI solutions. So I'm very pleased with the progress here. The first quarter was a challenge, but I still consider this to be a big win for us, and we're really active. And even at the current pace, if you did nothing else, things producing 5 million a year of Bitcoin and cryptocurrency. So it's a really good business for us. We're excited to be part of it. Do I wish the volatility was a little lower in Bitcoin? Of course I do. That's something that it's really hard for us to deal with. Hold on 1 second, please. Yeah, Darren was tapping on my shoulder saying, don't forget, Todd, though, we're staying long Bitcoin and we're long term, and that's absolutely true. I mean, we're a big believer in the fact that there's going to be some replacement here in terms of fiat currency. And it still fits our model as to what we want to go do here. And so this is something we're incredibly pleased with. And, the cloud mining thing, we have some good consultants with us. We have a nice platform being built. We hope that improves. With the decline of Bitcoin and the hash rate, it has been a little bit of a challenge to watch how that business would work. But we think with the data centers we're building, we're going to have a lot of opportunity to offer additional services. Can you go back up to Coolissys for me? Thanks. So let's get back to Intertek. Intertek is an important acquisition for many reasons. One, Coolissys represents a business that's been around since 1969. Take Intertek that's been around 26 years, and you connect the small devices we make for the commercial, defense, and military market. But don't forget, Coolissys makes one of the top power supplies for data centers. This power supply runs in existing data centers today. And we think that the combined company of the 60+ engineers with Intertek and the combined sales organization that we have in the US with FMF funding will propel the company. So if you look at it on a simple basis, Coolissys next year, if we just did no changes today, is going to do about 25 to 30 million next year in revenue, not including their MTX contract. You layer that contract on, you put the company closer between 35 and 40 million, and then you look at them producing a miner in the mining space and the ability for them to come up with more advanced solutions, especially with their talks with the chipset manufacturer. And what you have here is a business in radio frequency, making commercial defense products, telecom, industrial, medical. We're very pleased as this is to be in the foundation of the company. Amos still continues to run it after many years, and he's excited about the growth. This morning when we had the conference call to approve the acquisition of Intertek by the board, I think Amos was relieved after a year and a half of hard work with MICT, et cetera. This makes Amos's team an engineering powerhouse. I think that this is something that can grow for a long period of time and will represent the foundation of one of the holding company's key assets. Now, I know I get a lot of questions about whether this will be sold off or IPO'd. There's a lot of opportunity here, and I think it's important to people to look and see as DPW is somewhat as a holding company, it's somewhat like private equity. I put in my chairman's letter to look at Icon Enterprises so you can understand that Icon Enterprises recently sold off its casino division, and it's recently did a deal in its automotive parts division. We'll look to do deals that make sense for all of our subsidiaries as we grow them out, and we grow them out from commercial defense to hospitality to lending. We'll look to do other deals. I'm very pleased with what's going on here. Do you know if Amos is on the call today? Amos, are you on the call today? I think you may have been traveling to Israel. No, I don't think he's on the call. Let's switch over to the lending business. Billy, are you there?
I'm here, Todd. How you doing?
All right, my man. All right. This is the fun part. This is one of the exciting things is you being a lender. Billy, I thought maybe you could talk about the kiosks, maybe give them a little tidbit about what you're doing behind the scenes with kiosks we talked about at one of the last conferences we presented at, and talk about the loans you're making to other public companies and how you're growing digital power lending. I know you're really starting to hit your stride a little bit. You're getting a lot of deal flow. Maybe you could talk about the kiosks a little bit and what you're doing in the ATM business.
Yeah, sure. Thanks, Todd. So let me just quickly give you a little brief overview. But, like Todd had mentioned, we've basically built an incredible California finance lending platform over the last 6 months. We've created a network, I would say, with some of the most sophisticated Wall Street investors that I've ever seen that can, with us, help us analyze and originate almost an unprecedented deal flow. It's almost like the GMAC model where our lending license allows us to provide capital to our subsidiaries and our subsidiary CEOs, which can be very time consuming for them. We allow them the capital to go make investments. And at the same time, we've developed a really interesting network for individuals to participate in deals that would basically be very hard for them to find. And We can do that through an online platform. We can offer micro loans, which is becoming very, very attractive to investors, small investors that get to participate in deal flow that they wouldn't see from Wall Street. As Todd mentioned, we're rolling out this kiosk platform, terminals, if we want to call them that. We mentioned in January that our intent was to do that in Southern California. We're in the late stages of rolling that out. It is in Vegas at a conference we started to kind of talk about, really compelling to the audience, to the investors that were there listening, because it's very exciting to be able to sell crypto that we're mining in our facilities on these machines. And all of the research that we've done has shown that there's a great need for people to want to buy crypto from the machines. These are some of the most incredible machines that exist. They're not real expensive like an ATM machine, but they allow individuals to wire money, for example, with a money transmitting license, which we will have. They allow an individual to buy crypto. They can pay a utility bill in Mexico City from Los Angeles, so they can buy microloans on the box. So we're very excited, about the vertical integration of being able to mine our own currency, to offer that to individuals, and we're excited. We think that the numbers that we've put together are very compelling. It'll be profitable in short order. It's not a huge CapEx commitment. And we think throughout Southern California, as we see these machines start to really ramp up, we'll roll them out in other areas. But right now, we've got some great partners that are going to help us do that. They've been doing it for a long time. They're experts in the space. They're going to run it for us, and we're very excited about it. I'm really looking forward to the numbers that we can put up in the June ending quarter, with the ability for us to bring in friends of 20 or 25 years that are experts in investing in microcaps. I've been building companies for 25 years in microcaps. So with all of us together, we can find incredible opportunities, develop a portfolio of warrants and equity in companies that we assume and hope for shareholders will be worth a lot more than what we're investing the dollars into. So anyway, Todd, back to you. I appreciate the time to be able to kind of tell everyone where we are.
No, it's exciting. It's exciting what you're doing there at Digital Power Lending. I've been pretty impressed. As you know, we run a holding company, and I keep reiterating the companies operate on their own, with Darren, Amos, and Billy running their own shows. I'm involved with them and try to help them provide capital and growth, but we really believe that the sum of the parts will add a lot of value to the total value of the business, and Billy's out there making loans and building the balance sheet. We're pretty excited about that. One thing that has happened with Billy too is there's been so many people that he knows in the space. We have a lot of, as Billy talks about deal flow, the company's been able to look at recent deals and decide whether we wanted to participate and potentially buy other businesses that met some of our existing verticals. Hey, Billy, I think we should answer one of the main questions I've been getting, and I understand that you have some news today. So why don't we talk a little bit about what happened with IM today, and you could maybe let the market know what happened with the IM transaction. So Billy, let me set the stage. You lent them $1.6 million initially for them to buy and build out the 4th restaurant. That hospitality business is humming now. We think it's going to do somewhere about $10 million, I think, over the next year. They've been in business for 4 or 5 years. They're doing really well. That's going to be integrated in our financials in the next quarter and add to our top line. Why don't you talk about what you're doing with David Kraus and his team there, Debbie Kraus, and what's going on with Prep Kitchen?
Yeah, thanks, Todd. So I know it kind of comes as a shock, but we've closed a transaction to acquire IM. We, in doing so, pick up an incredibly talented management team that have a long history in the space, including Cheesecake Factory. The restaurants are doing extremely well. We do believe they'll be profitable immediately. They were last quarter. All of the numbers that we've seen for the last several years, they were profitable. So we're very excited. We will own 51%, which allows us to consolidate. And they will have to, obviously, out of cash flow, they will be paying back the loan. And once the loan's paid back, they will own 49%. So right now we own currently about 98.2%. They will earn over the next, probably out of cash flow over the next year and a half, They're 49%, and they're great partners, and we're very supportive of what they're doing and already on a path to acquire and build out more restaurants. So it's great for us. It's great for them.
I've spent a lot of time with their team. David and his wife, Deborah Kraus, I believe they were, and I hope I didn't get this wrong, she was really instrumental in building out Pure Nightclub in Vegas. They did an incredible job when she left Cheesecake Factory, and he's really an expert marketer. I've talked to them about their plans for Prep Kitchen. I think they plan to open 35 in Southern California and up and down the coast. That's a big number, but they're already at 4 locations in the first, I think, quarter in terms of what they have. San Marcos, Little Italy. I apologize. They have La Jolla and Del Mar, right? So there's 4 locations. I think they'll have a 5th location in Los Angeles. I think that may have been as early as today. So they're really ramping, and that's a really important business for us to be part of because they're kind of proven operators. We really are excited to work with them. They're really dedicated to what they do and have a proven successful track record. And the uniqueness of this transaction, which is what I want to talk about, is that Billy lent them $1.6 million. They have to pay us back in order to earn their equity. And that's the kind of partners we want, because they said, listen, give us a loan. We're going to go out there and prove this model. We're going to pay that back, and we're going to earn our equity back on the loan. And so we get to go out there and be partners with someone where they really run all the day-to-day operations. We truly run as a holding company. They report to us quarterly. They got a great accounting system. And this is really something, for those of you who have not invested with me before, it's important to know that I made money on Jack in the Box. I made money on the sale of Taco Cabana to private equity. And I really like the hospitality space, as I've joked about before. And plenty of you have mentioned that I don't seem to miss a meal, although recently, we'll see about that. Just have a little fun. We've made a lot of money in the past in the hospitality space. We think that they're great operators, and these are the kind of people that we want to be part of and with. So we're pretty excited to be part of them. Billy, thanks for spending the time here. I'm going to move on to the next subject. Any of you have any questions for Digital Power Lending, or if any of you have a business that needs a loan, send us an email. Maybe we'll lend you some money, because we're pretty excited about that business. MTIX. I'm gonna finish on MTIX, and then we'll go to new questions. Okay. So this contract is starting to pay off, and if it wasn't for lawyers, I'd give you more guidance, but I'm not going to. We expect this to be 6.4 to 8 million of revenues for Cool-Assist this year. That contract continues to ramp. I've tweeted out a couple things about what they're doing in Europe. This is truly our biggest outside investment. We truly believe this company will dominate its space. It's the only one of its kind, and we completely believe this business will ramp. We believe that the Avalanche financials will be current in the next month and a half or 2 months. I know they're behind. And once they're current, we will seek to uplist the company to the NASDAQ, making DPW one of the biggest beneficial owners of the company. We think that adds a lot of value to our balance sheet. Remember, every dollar that this goes up in price puts about an additional, I think, around $12 million on our balance sheet, along with our ownership of the company at Cool-Assist as a contract to be the general manufacturer to build these with Bianco and the other subcontractors. So this just completely is something we're completely excited about. We've said it, continue to say it from the hills. We bought more. As you notice, we've increased our position, and we're very clear with them. We're happy with the management team. We're happy to be an owner. We do not consolidate their financials. We have lent them the money, and we do have a convertible, which we can convert at our option or be paid back. But we do own a large portion of the common stock in the open market, I think a little bit more than 10%. And we're very pleased with this. This purchase order will hopefully lead to additional purchase orders as we deliver machines. I expect the number to be much higher for 2019 than the 8 million, the 6.4 to 8 million we're looking at for 2018. Let's continue on. New acquisitions. We are always looking at businesses that we can put into our existing portfolio to help out, especially in hospitality, crypto mining, etc. The one thing I would say that I get a lot of questions on is about dilution, capital raises, etc. This will start to wane a little bit. We won't need as much capital. For example, just one example of not needing as much capital for operations is Darren's team is producing $400,000 worth of crypto a month. So if Darren chose to, he could buy the new miners from Bitmain that we're buying directly by sending them cryptocurrency. And with those prices being down, his average price to get to 10,000 is less. Plus, we're building our own miners. That cost will be even lower, we think, internally over time. But the fact that he's generating $400,000 a month is a big offset to the prior burn that he had when we made those purchases of those machines. So as the companies like Intertek come on board, they have these long tail contracts, they start to deliver on their promised value, you'll start to see the cash flow increase, and the needs for us to go to market will be reduced. Clearly, everyone saw we just recently did a big deal to buy Intertek and to do some shuffling around. When we acquire in the future, and one things that Will Horn will be thrilled about, because our CFO pulls him out, he's pulling his hair out about this, will be our capital costs will come down as we have scale past 60 million in assets. We'll bring down our borrowing costs, and we'll go to single source lenders to where we can borrow 5 million, 10 million, 20 million at a time to make acquisitions that are more synergistic, et cetera. It should be easier on the balance sheet going forward as our cost of capital goes down. But as a present, you'll start to see us moderate as we integrate the existing acquisitions we have, and we work hard to make them profitable and to work them forward into 2019. As you know, we've given guidance that going into 2019, we expect to generate free cash flow, and this is something that's really important to us as we go forward. I've already talked about the initiatives, so I'm not going to really cover this any further. I am going to get to some questions. Let me answer some of those questions for what we're doing for for this existing quarter. So the question from Lisa Thompson was, does the $68 million include Intertek? Yes, it does. 10 million of the 68 million comes from Intertek. We've already covered her second question, the status of the IM acquisition. One of the main questions, is there any issue with maintaining the New York listing? We have present equity of over $21 million. The required equity is 6 million. So we are well capitalized to maintain our listing. And as that I know of, New York Stock Exchange do not have the same issue with the dollar as the NASDAQ does. We are in good standing, as I know of, as of today with the NYSE. I don't know why that rumor continues to persist. It's nonsense. We have passed the 1-year mark since we satisfied our continuing listing application, and we're very comfortable with our relationship with the New York Stock Exchange American. How much have you raised through the ATM? We've raised 13 million off the ATM so far. What is the status of MTX machines? They're being delivered, and as we've said, we'll deliver $8 million worth in 2018. So I don't know if there are any other questions. We appreciate everyone's time. We're really proud of where we are. I do wish, a part of me does wish that we could accelerate a little bit our reporting so people could see that revenue ramp. But keep in mind, as you get out there, there's a lot of information that I see on the web when I get questions asked that are really misleading. When you look at our asset base, it's important to understand our future revenue and what we'll generate with future cash flow. And so the story is intact for us. We still plan on doing 44 to 49 million for this year. And if everyone does the math, which I can't take you on, you have to go on your own journey for that math, you'd be able to figure out what we can do for the following year, given our growth. We will give guidance for full year when we're comfortable, sometime when we report in August for 2019. We'll provide some guidance at that time. But the story for growth with Intertek, Coolassist, Super Crypto, Digital Power Lending, MTIX, our hospitality business, and our real estate business. And I stress to everybody, there is real estate. It's not substantial enough yet to go into it. When you look at materiality, I would encourage everyone to understand that materiality is function of our total assets. We will disclose the real estate transactions when we believe they're material. And with that, I thank everyone for being a shareholder. Thank you, Darren, all the parties. I'm most sorry you couldn't be here. Will, thank you very much for being on the call. Will, as we hang up here, do you have anything to add or anything you'd like to say on the call before we hang up?
No, I think you did a fantastic job going over the different segments and it operationally.
Right. Well, Will, we appreciate all your hard work. You've taken a company that has never had this kind of reporting and turned it into a holding company, and you've taken a bunch of acquisitions and put them together. I know there's a lot pending, but you did an amazing job. We appreciate your hard work and the team you're building around the financials. I really say this to everybody on the call, and I said it a bunch of times. There's no better CFO, I think, in the world than Will, and hopefully we don't lose him. The deal I have with Will is if Microsoft offers him a job, he can take it. Other than that, he has to stay with us. So anyways, Will, we appreciate your time, everybody. Have a good week, and we'll talk to you soon.
Thank you.